What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the SoFi stock. We will also be covering the overall market and some big news that has been coming out lately. If you find any of this information useful, be sure to smash the like button. Don't forget to drop a comment. I'm going to comment back to as many people as I can, and don't forget to subscribe to the channel. We're going to try and get this channel to 20,000 subscribers by the next 1 to 2 earnings, and we're going to be keeping you updated on all the breaking news. So, guys, today was the first day of the opening week because we had a President's Day yesterday, so the market was closed, and the market was taking a massive hit today. It looks like we have, big earnings on the horizon, which is Nvidia, a Fed meeting, just a lot of volatility, and stocks in the AI and also semiconductor sector have been running hot for over 12 months. Those are the stocks taking the big hits today, but we saw something that we haven't seen in a very, very, very long time. SoFi inversed the entire market today, and it's just a weird time for this to happen. I'm going to show you many reasons why I believe SoFi had a really nice day today. I think some big whales are coming in on this stock. We also know who those whales are. Kathy Woods, you guys got to give her credit. I'm telling you right now, if Kathy Woods didn't come in and buy the past couple of months, especially the past couple of weeks, I mean, this stock could be at potentially like $7.50, $8 instead of where we are today. So that's what's exactly happening, guys. You got whales like her coming in, moving to the top 10 institutional ownership. Kathy Woods was definitely buying, but you will not get that update in today's video because ARK's buys don't come out for another couple of hours. But if you go onto my Twitter, you'll get those live updates. Once again, guys, right now, I believe SoFi is extremely undervalued. It is in the banking sector, but it is not doing exactly what other banks have been doing for decades and decades and decades. They are innovating, no branches, giving back to the customer with high interest, taking the hit, taking the loss on products that may not benefit SoFi at that specific time frame, so that they can have that customer for a lifetime to benefit off of larger, other more profitable products at a different time. So SoFi will take a hit in the short term to continue to have that customer for the long term. Banks do not do that. Banks want to profit as much fees as possible every single quarter. You're seeing fees jump to the billions and billions. Banks opening up fake accounts. Just the list goes on of shady, greedy stuff. These banks have no interest but to raise their dividend and do buybacks to cash out these old heads that have been in these banks for decades and decades. I'm telling you right now, SoFi is doing what they need to do to be a profit machine in the very near future. And I'm talking 2 to 4 years out. This company could be printing billions of dollars. Once again, if you find any of this information useful, be sure to subscribe to the channel. Let's get into it. All right, guys, we're going to do a 20-second recap on the overall market. The market was getting hammered right out the gate early on in the morning. S&P 500 down 0.60%, Dow down 0.17%, NASDAQ down 0.92%. And look at the Russell 2000, guys. Exactly what we didn't want to see. Small caps getting hammered the most out of every single index. And SoFi inverse the Russell 2000 today. We haven't seen this in I don't even know how long. Over a year, guys. Up 1.8% on the day. This doesn't seem like a lot of green, but I'm telling you, at my list of 100 stocks that I'm watching, SoFi was in the top 3 today. So the market took a massive hit. Guys, take a look at what we had early on in the morning. SMCI, ARM, AMD, Nvidia. Look at the semiconductor stocks. Marvel just absolutely getting hammered. 8, 7, 5, 5, 3. I mean, these stocks have been running hot, but that's a big reason why the market was just crashing this morning. And if you want to compare SoFi to, some of the fintech, technology, growth, AI, stocks, take a look, guys. Palantir down 5% on the day, Coin 4.2, Lending Club 4, Upstart 3, Nubank 1, PayPal 0.66, Affirm 0.52, and then we got a little bit of green on Square and Hood. And SoFi finished at the top of the list, guys. 1.56% green, including the after hours, guys. This was a very good day for SoFi. I think Kathy Woods was definitely buying today. Once again, you won't see that, update till tomorrow, but I think she made some big buys today, guys. When she has her eyes on a stock that she wants and the stock continues to go red, she continues to load up the dip. We're going to get those updates for you on Twitter, so be sure to follow me on Twitter at KyleWhiteGoat. Now, guys, a big reason why I believe SoFi was up today was because of this Capital One looking to buy Discover for $35 billion in a deal that combines major U.S. credit card companies. So Capital One wants to acquire Discover. They see benefits in the overall company, but you need to really look inside of what Discover truly has under the hood. What business models are they going after? Credit cards, lending, where are they at? Wait till you see exactly what Discover has, guys. It's going to absolutely blow your mind. And just remember, before I show you this, Remember, SoFi was getting the 20 plus downgrades the past year because, they're in the student loan business, extreme risk under Biden. They're in the personal loan, unsecured personal loan business, with delinquencies rising up, guys. Just nonstop short bear thesis against every single part of, SoFi's overall business. So guys, check this out. This was on my Twitter last night. Capital One wants to acquire Discover for $35 billion. The current market cap on Discover was $27 billion. So Capital One was willing to pay a 30% premium for Discover. 30%. Why? What is that company doing? Are they growing? We're going to give you that information. How does this relate to SoFi? Remember when SoFi got downgraded 22 times because of risk for unsecured personal loans, risk for student loans? Check out Discover's business model. This is what Capital One wants. They want to acquire everything, all of the assets, everything. So look at this, guys. This is on their last earnings report, just the credit performances and trends of Discover. Look at this. Private student loans, guys, with 30-day delinquency, still pretty high. It didn't go up, but, their delinquencies are on the rise. Personal loans, guys, look at the 30-plus day delinquency rate. Delinquencies are rising. This is the exact same thing SoFi is getting downgraded for. Personal loans, private student loans. And this is what Capital One is acquiring today because they want to be in these different businesses. They want to be in personal loans and private student loans, guys. I'm telling you right now, this is why SoFi went after these sectors, guys. These are money printing businesses over the next 5 to 10 years. Do you have any idea, how high, credit card debt is? This is where you get credit card debt reconsolidated into a personal loan. And that's where SoFi sees, that opportunity. And also private student loans. Right now, SoFi's not even worried about that because they know that, these are going to pick up in the very near future. But, rates are just too high right now. But, in the future, when rates come down, it looks like Capital One sees opportunity for private student loans when rates get refinanced on student loans. But why a 30% premium on Discover? You need to do the due diligence on the information I show you guys. Take a look at this. Capital One's willing to pay a 30% premium on Discover. This is a company that has had the same net income profitability for half a decade, guys. EPS growth -% over the last 5 years, guys. SoFi's planning to grow EPS plus 700% the next 3 years. Look at these numbers, guys. Discover net income. This is the year 2019, $2.9 billion. 2023, $2.8 billion. In 5 years, they can still not have, consistent growth on profitability, guys. Looks like Capital One wants to come in and, fix this business model, take over the segments. I just want you guys to see that we are getting 30% premium on companies that are declining profitability over 5 years, okay? That is absolutely insane to me. And guys, right now you need to realize SoFi trades at an $8 billion market cap, okay? It's hard to go straight off EPS because the company hasn't even had 4 quarters of profitability yet. But understand, the company's sitting on $3 billion in cash. That's 38% of the entire company in cash alone. At $2.5 billion revenue for 2024, the price to sales is 3.2x. Some of the slowest growing banks in the world are trading at 2 to 3 times sales. Average legacy banks grow at revenue rates of 3 to 5% per year. SoFi just grew revenue at 35% in 2023. EPS growth is expected to be 700% over the next 3 years. 100 million net income 2024, 800 million net income in 2026. Fair value for actual growth rates and the scale that they have brung on with members, it should be more at like a 6 times sales, which equals about $14 to $16 per share. I'll show you what that looks like on market capitalization. So guys, you plug in the outstanding shares on SoFi right now, about 960 million. You put $15, which is the middle end of 14 and 16. Look, the market cap still doesn't get up to 15 billion. We're talking 14.4 billion. So that's, about under 6 times sales. So that's just going off of like the growth rates right now. Okay. It's hard to judge this company on EPS and profitability because they've, pushed so much into marketing and scale. Now they are getting into, profitability. But this will be a good metric, EPS, in the next 1 to 2 years to value where the company is headed. But right now, I think price to sales is a great metric because the company continues to scale out 30% growth every year. I think there is a small chance we get 25 to 35% this year again, even though right now the analysts have us guided down for 15% because they are not actually watching the company's fundamentals. They are just valuing their own opinions right now. And anybody new to the channel needs to understand that this company is hated on Wall Street, okay? 17% of the company is sold short. What you need to understand with short interest this high, it can only end 2 ways. Massive failure or a moon launch, okay? It's either going to be SoFi at $3 or SoFi at $30. In my personal opinion, over the next 12 to 18 months, there is no in between when you get short interest this high. Place your bets now, guys. Take a look at this. We're talking 150 million shares sold short, 17% of the entire float, guys. This is absolutely incredible for a company that is guided for full year profitability, flipped the milestone on profitability. These short sellers are, basically valuing like SoFi is going to go out of business or completely fall off the rails. So do your due diligence and understand this is why the stock has been really, really contained, in my personal opinion, over the last 1 to 2 years. If you made it to the video, I want to say I really do appreciate it. I enjoy doing these videos for you. If you find any of this information useful, be sure to smash the like button, drop a comment, and don't forget to subscribe to the channel. We're going to be keeping you updated daily on all the breaking news. Once again, my name is Kyle. Hope you have a great day.